Welcome to Forex Films. Today is Thursday, June 16th, 2011, and we've had a lot of interesting price action in the past 2 days. We had a three-wave movement down to here, so it was a possible turning point. We had base building and a move higher, which turned out to be just a B wave. When we got back to 43.50, I was calling for more shorts, so we shorted down to here, and right here it looked like we might be slowing down. Turned out to be a fourth wave, fifth wave down, and we really got some good support, and we really shot higher from there. Actually bought in down here, and I've already added to positions on Euro and Australian dollar. Also have some small positions in other pairs, but not nearly as heavily as on those two. Now, reasons for looking bullish, besides just the obviousness of these candles here, is three waves down here. A lot of people want to count this as five, but you have to break one of the primary Elliott wave rules in order to count that. People who want the five-wave count suggest that the incredible leverage of this market exaggerates moves, and the second wave could go below the origin of the first wave due to that. But that decreases the probability of that move tremendously, so it's not very wise to trade like that. So really, if we break these levels, like 43.50 and especially 45, then we're really looking like we're heading back to 1.54, 1.55 before renewing bearishness and the downtrend. It's even more obvious on other pairs that we will cover later. So I'm really looking at any chance you get, add into your position. Have good money management. Make sure you give yourself plenty of margin to work with, but just keep buying. This is most likely a third wave that's going to take us a lot higher. It's the same story with Australian US dollar. This has been complicated to count. From the beginning I was counting this upward movement as five waves for the end of a first wave higher, then A to here, B to here, and C down to here. And when I saw this movement come up, it was possible that it was another 1-2, but with where other currencies are and retracing this much, it really did not look very probable. And we did end up going down to here, and I'm in more about the 105 level, and I've added again to this position. It looks like it's going to start screaming higher, so there's a slightly different way to count this, where wave 3 ends here. This whole mess is 4 into here, which is 5. Then we have A, B, C. And it really doesn't matter. Either way, we're starting a wave 3 right now, which will take us much higher, and the end of 5 wave, the fifth wave of this entire pattern will most likely terminate about 1.12. So keep your eye on that level. As things progress, we may move that higher, but that's really probably a minimum target. In the meantime, you're going to get a lot of good rollover holding this. So it's a great pair to trade bullishly. Dollar CAD. This one has been a bit more confusing. We have our parallel channel here. We had a fake out to the upside, came down. It was a more clear break. Came up, tested it, tried to go lower. I got out of this pair because US dollar was gaining across several other currencies, and I knew the Canadian dollar wasn't going to hold up against this, or at least it had a very low probability of happening. And sure enough, we shot straight up, came down, tested, shot to a new high, 0.99, and now we're really starting to sell off again. Unlike other pairs, this has actually made, the dollar's made a new high against the dollar CAD, but just looking here as the start of wave 1, so this is probably wave 1 or maybe the second to last wave down, because this is really a corrective mess of a B wave, and maybe we'll head straight down to 92.50, which is quite a few pips away. So this is probably going to be a good short, especially if we're going to close the day with this kind of candle on the daily. It really speaks well for Canadian dollar. And dollar Swiss. We appear to have wave 1 here, 2, 3, and this can either be A, B, C, or maybe even a triangle A, B, C, D, E. Now we're heading lower. I don't want to be having much margin used up on this because I think it's going to be well capped or well supported rather by 0.82, and it will invalidate our wave count if it goes below 0.8140. However, that just means we're going to continue lower. It doesn't mean that this short is invalid or not a good trade. And finally, we have the pound US dollar. This has been very clear, very easy pair to trade. I don't like to trade it too much just because it takes a lot more margin than other pairs. Very clear 5-wave move up, 5 waves down, a complicated B wave, but it was very easy to spot that we were going to break out of this and go much lower. And then seeing this rise here, it was pretty obvious that this had to break down again, and of course another 5-wave movement down, almost retraced the whole wave, and now we are shooting higher on pretty much every pair against the dollar. US dollar is just being sold off across the board. We have had very interesting news that came out this morning. If you didn't see my post on forexfilms.com this morning, you could check it out. But basically, we had Eurozone CPI came out slightly lower than expected. We had UK retail sales that were horrible, much lower than expected. And the industrial production in Switzerland was much lower than expected. All bad news for European countries, and then the US data that came out today was all good. So we sold off this morning, and then we've been shooting upward since then. Tomorrow we have not too much event risk, but at 5 o'clock Eastern time we have Eurozone trade balance. I think it'll just provide continuation. Keep buying on the dips. We have University of Michigan consumer confidence, which could supply a lot of volatility at 9:55. And the last real event we got going on is right after that at 10 o'clock, which the ECB publishes its monthly report. And just expect us to build up. We'll probably just keep shooting up until in the afternoon, and then we'll start consolidate, and everything will drop off. So that's pretty much it, except there is one yen cross I want to talk about. Swiss yen, and this is really better viewed on the daily chart. let me zoom in a little bit. What we have here, this is far from guaranteed, but we have this candle pattern, which I like to trade lower once it breaks this low. And if we get continuation, it should be great, sharp continuation to the downside. And really, I traded this and I got out of it this morning so I could be more long risk. I think this is going to have to wait until we're risk off. Once the Swiss franc makes its new all-time low against the US dollar, I'd like to trade this. I think Japanese yen is going to continue appreciating at the same time as the US dollar, and I think the Swiss franc is going to start depreciating, and probably very sharply. Look at my long-term dollar Swiss analysis on forexfilms.com if you're interested in more information on that. But if this can hold out for that without screaming higher, I think this will be an excellent trade. And even if it doesn't, I want to be short this pair when we finally get risk off again. I think this will be one of the best trades out there, but time will tell. Good luck trading, and thanks for watching. Any comments or questions are appreciated.